What's going on, guys? This is a follow-up from yesterday's video, Trading 101. I was talking about scalping, and I was mostly telling my personal story on how I was a scalper back in more than a decade ago. And today I want to talk about day trading. So the definition about day trading is basically you open a trade on a day and it has to be closed at the end of the day. That is day trading. Scalping is more on a smaller time frame, trading in and out dozens of times, sometimes hundreds of times in a day. But that's not very feasible. Well, it's doable. Everything is doable, but you need to have really high volume in order to have very low fees. So the next solution for the average Joe that wants to get into trading is to go into day trading, because scalping is dominated by algos, and day trading you can do 2 or 3 day trades a day, and you could be fine, you know, if you trade 4 or 5 times a day. So I'm going to tell you some conclusions that I have after studying hundreds of indicators and building thousands of trading systems over the years, and give you like a brief resume of what you need to know. So there are basically two great types of strategies for day trading. The first one is based on ranges, and the idea is that you're trying to play the range. So basically you're buying at the bottom of the range and you're trying to sell until the range is broken. So that's the first type of strategy that you can look at. What you're looking for this are stocks. There's a lot of stocks that are non-momentum based. In my firm where I used to trade, there was a trader in particular that I have in mind now that used to trade a stocks that was moving 7 to 8 cents a day. It was a very low volume stock, very quiet, and he loved it. He came in before the market would open. He would place all his orders, all his bids, all his offers, and that would be it. That's not my style. I'm not a professional range bound trader at all. I'm a momentum trader, as I was mentioning. So which leads us to the second phase. Sooner or later, this range is going to be broken, and this leads us to breakout strategies. And there are many of those strategies out there. There are some that are based on the time of day. For instance, when you start the day on the U.S. stock exchange, like the first half hour, some people use that as a range, and then whatever breakout, whatever direction the market takes from that breakout, then that would be their signal to enter on the long or short side. And some traders like to trade the break per se. There are strategies where what you do is you place both long and shorts in the middle of the range, and then you liquidate at the extremes, basically. And you play that several times. There are also grid strategies where you have multiple orders a bit everywhere, and you basically play the volatility. So you place long and short orders a bit everywhere, and because of that, a lot of brokers have placed the first in, first out rule, because it prevents people from grid trading, because you could place a long and a short order at one level, and then a long short, long short, long short, and then whatever orders would get filled, and you would keep making money on these small moves, because let's say it did this, went to the next level, and it did things like that, then you would you could make a lot of money on a market that is basically dead. And what I've learned from watching traders doing this is they like it quiet. Like they love lunchtime on the stock exchange, because lunchtime is very quiet. People go eat, and the market, like the breakouts, are false most of the time. This is why I didn't trade these instances. So these are the two types of main systems. You're either a range bound trader, or you are a trend follower or a breakout type of trader. Some people have strategies where they scan for stocks that have moved a certain percent during a day, and that gives them the opportunity of trading always similar patterns. So sometimes they will watch stocks that go up 100% or 30% or whatever, and then as the stock starts to deflate, they would short it and play they would fade the trade basically. So these are the type of the two big categories. So why is this important? Because I want to show you a little bit how you can combine this. And when designing your trading system, you want to think about the types of indicators that you bring on your chart, because you don't want to have things that repeat themselves too much. You want each indicator to have a specific role. The reason I'm saying this is because I see a lot of people that have an RSI on their chart, then they have a stochastic on their chart, then they have a momentum on their chart, and MACD and things like that. And you're basically repeating the same information, and you're giving your brain sensory overload. So it's fine to have a trend following indicator like a moving average and maybe one oscillator, but if you have 3 oscillators, then even if they're not quite at the same parameter, same setting, then you're still reproducing cycles, and you're going to confuse your brain. So this being said, let's take a look at some of the strategies that I use now. It's a lot simpler than what people might expect, but to me, simpler is better, and I'll explain a bit how I do things. So let's say I'm looking for a trade. I usually for a day trade, that's important to mention. I usually will look at 1 hour or 4 hour charts, and I will connect 2 highs and 2 lows and try to figure out what type of structure I'm trading in. So for instance, if you look here at the US dollar index on the 1 hour time frame, then if we connect these 2 highs here, then we had last Friday, we had a big rejection here, and as price was going there, I would have had an indication that this might be a short, because as long as price is range bound within that, because a range doesn't have to be specifically 2 parallel lines. Sometimes the range is getting shallower and shallower. So if we look here at the just like I was using the SPY and another stock, what I do when I find Forex trading ideas for day trading, then I would look at the index of the US dollar, and then I would look for a currency that is trading in the hours that I want to trade, and that is US based. Like this one is the US Canadian. And then I would trace my lines. Like this. So as you see this on the main US index, there was rejection and it went back, and there was a fight here basically. and the US Canadian was even weaker than the average market. So if I'm looking at this, I'm like, okay, this might be an interesting point to get in. Once I have traced this line and this line, then if I see a kiss against the resistance, then I might have an opportunity. And then I go on my system, which is very simple. And these are indicators that are easy to find. They're basically pivots. All the lines that you see are weekly pivots. And the blue line here is the daily pivot, and the yellow line, orange line is the daily open. And these are lines that I've been using for years, and if I day trade, I find myself to be, I feel like I don't have a map, basically, if I go against the market, because I find that the market really bounces off, as you can see here, here, and it moves from line to line, and it really helps me in determining when to get in and when to get out, and it's much faster than most indicators. But I do have one oscillator that I use that I built a while back, but basically gives me a point where the market is technically high, and so I have these entry points. So let's say I'm looking at this is last Friday. We had a setup here on the US dollar index. So now I'm looking for a US dollar denominated pair, and then I would go on a smaller time frame to see if I'm close there, and then I would confirm with the system, and I would make sure that my the price is not closing very aggressively above the daily pivot, and that would give me an entry. So basically on last Friday, let me just show you this system real quick. On last Friday, I had these two opportunities here to get in. So this way I use a bounce, which is a ranged based strategy, if you will. But I also use, on the shorter time frame, I use a filter, which is trading in direction of the pivot and trading in the direction of the open. So what I usually do is I will sell the level of the open, because I never trade against the direction of the open. So what I mean by that is that if once the price closes below the open, then I have confirmation, basically, and I would look for a short, and I would place my stop at the last high or two highs above. It depends on the situation, really, but basically, while day trading, I try to find 1 or 2 trades per day. I'm looking for a bounce on a chart. I'm looking for a chart pattern that offers me some type of bounce, or a very aggressive long-term trend. And in this case, it would be a very short trade. I would close my position as the price of the index comes into the support. I would have closed there regardless of where the price of the US Canadian would be, and I would liquidate at that point. But sometimes if I can find a long-term trade, a long-term trend that is on the weekly, for instance, or on a daily chart, then I would try to pyramid into that position. So that's where sometimes trades I qualify as day trading trades, because I'll close it on the same day, but there is an opportunity, so I'll take it. Like I'm not looking, I'm not very discerning for that. But if I see a bigger trade that I think can last for days, weeks, then I'll trade according to that. I'll try to pyramid into the position. I'll try just to protect my stop as soon as possible, and then I will try to squeeze as much profit from the market as possible. So your job as a day trader is basically to have all your positions closed at the end of the day, or at least on Friday. I find that when trading Forex, unless there are news coming on the Friday morning, which is not rare, but it's less frequent, then I try not to trade on low liquid days. Like Fridays is not a good time. Usually when I trade Forex, it's usually from the, usually I'm there on Sunday night to see if there's an opportunity Sunday at the opening of the market. And then I'll try to establish positions on Monday, Tuesday, and I'll treat them as swing trades. But in this instance, it would have been a day trade, and I would have been closed on the same day. And I'm agnostic to day trades or swing trades. But that's basically my approach to trading. I find patterns, I find breakouts. If it's a double top, I'll trade the pattern. If it's like this, if it's a constricting triangle, I'll trade it as a range type of. But once it breaks out of that triangle, then I'll treat it as an explosive momentum trade, and I'll try to swing trade it and hold it for several days. So I hope that was helpful to you guys. If it was, give me a like, and I'll see you in the next one. Peace.